All right, welcome, and thank you for being part of our presentation today called Flood Insurance as a Tool of Community Resiliency. And really, this also will talk a lot about personal recovery, all using flood insurance. So just a little bit of a background of who I am. This is more of a perspective so that you can kind of get an understanding of where I see flood insurance in the different places that it's used, anywhere from my position as a co-chair of the National Flood Insurance or National Flood Association Legislative Committee, all the way to chairing the Massachusetts Coastal Coalition, which is a nonprofit consumer advocacy and information organization, all the way down to being the flood specialist for Rogers and Gray Insurance, where I actually sell flood insurance and run the flood department there. That all gives me great perspective to understand how flood insurance can be used as a tool for community resiliency and individual recovery, all using the tools of flood insurance to better our communities and our own individual financial situations. So here are some questions that we need to answer today. How do we make recovery better, faster, and stronger, right? That individual recovery by using flood insurance. And then how does that translate into how flood insurance makes us more resilient, both as a community and as a nation? And then how do they come together to better our community? So what I thought was really interesting was that this is not just a concept that has been thought about independently and in local communities and through different organizations. Actually, the federal government has recognized that there is an importance to having financial capabilities by having April be the National Financial Capability Month. And I thought it was really interesting. We're on their website. They say, check your insurance coverage. Having insurance for your apartment, home, or business property is the best way to be sure you will have the necessary financial resources to help you repair, rebuild, or replace whatever is damaged. You know, there's a striking statistic out there that says that 40% of Americans do not have enough cash in their savings to recover from a sudden unexpected expense. So there is a huge need for community and individual recovery and resiliency. And additionally, former FEMA Administrator Brock Long introduced the FEMA strategic plan in 2000, the 5-year strategic plan in 2018. In that strategic plan, for the first time ever, insurance was listed as a priority within the strategic plan. And you can see this page from that plan, which is closing the insurance gap. Resiliency requires all levels of government and the private sector. And just a quote from the strategic plan, it says, quote, experience has shown repeatedly that individuals, communities, and businesses that manage risk through insurance recover faster and more fully after a disaster. I think that quote alone sets the stage for how we'll be looking at flood insurance as a tool for community resiliency and individual recovery. Another great chart. This is coming from a study called A Proposed Design for Community Flood Insurance, which was done in 2015 by Carolyn Kowski and Leonard Chapman. And it's a study all about how a community can purchase a theoretical flood insurance policy for the entire community. But in that study, they actually spend a significant amount of time talking about flood insurance as a tool for resiliency. And you can actually see this chart is titled Conceptual Representation of Resilience for a Particular Disaster Event. And you'll see the quote here. The red dotted curve conceptualizes what could be achieved by widespread take-up of flood insurance, which increases the resilience of individuals and communities by both speeding recovery and lessening the magnitude of shock. But I also see this as a different chart. you can actually see that the y-axis is recovery and the x-axis as resiliency. So as an individual is recovering, they're also becoming more resilient. And we're going to look at some of that next. You can see here is recovery and here is resilience. Okay, so let's talk a little bit about recovery. Recovery needs to set the stage for resilience. Why? Because individual recovery is what causes community resilience. So a recovery is a return to normal state of health, mind, or strength, and the action or process of regaining possession or control of something that is lost. What I found really interesting, is that when we talk about recovery, a flood, recovery is the return of all of these characteristics, because a flood steals us of our health, mind, strength, and our communities. But how do we leverage the insurance to enhance our recovery? We want to make sure we get the most out of it. So let's talk about a single-family dwelling in Floodville. So building is valued at $100,000. Insurance is taken out for 80% of that. So that's because within 80% of the replacement cost, because if they're insured for within 80% of the replacement cost, they will receive replacement cost coverage. Building receives $80,000 of damage in a massive flood. So how can we rebuild this building for $80,000? And can we rebuild it for $80,000? Well, the building will cost $80,000 to repair because that's how much damage it received. But there'll be demolition costs involved, which will cost about $20,000. And because it's a substantial damage, the building has to be elevated, which is covered under ICC at $30,000. The total of recovery is total cost of recovery from this is $130,000. That's how much it'll cost to rebuild. Well, the building coverage will cover the $80,000 in damage. It'll also cover the $20,000 demolition. $60,000 is left for reconstruction elevation, but ICC will actually kick in that $30,000 to raise the building. In theory, in this example, $30,000 would be enough to elevate the building, but very rarely is it. So the total cost to recovered in this is $110,000, but we talked earlier that it's actually going to cost $130,000 to do all the work, and the total cost covered to rebuild and elevate, which is minus the demolition of the building, is $90,000. So can you finance the $20,000 to get to the $110,000 that's total recovered, and even more to the total cost to actually do the work? Can you? And so that is a big question that a lot of people face after a flood, which means, yes, you are recovering, but are you recovering enough to rebuild, or to even to recover enough to make your community more resilient by making this building more resilient by properly elevating it and doing all the things required after a flood to properly make sure that that building will not receive another flood damage again. So what's really interesting here is that in this example, it really starts to make you think, how many underinsureds do we have versus non-insureds, right? There's only 12% of us in this whole country, 12% of individuals in this country have flood insurance, but how many of those policies are properly insured? And it's a whole nother question. Now, condos. The dwelling policy is the only coverage that offers assessment coverage. So a dwelling form cannot be used to meet the condo policy coinsurance. So you can't get a bunch of dwelling policies to make up that coinsurance difference. A dwelling form will, in fact, respond to assessment from a coinsurance penalty. So if there is a penalty within the property, the policy will respond, and each unit gets an assessment of $80,000. In this instance, the only unit with dwelling form building coverage is on the 4th floor in this example, and even though they get the assessment because of the damage, they do not get they get the coverage for the assessment. So an assessment which could be given for flood to all the units, in this example, unit on the 4th floor way up there who still got the assessment is going to get covered because they had a dwelling form with at least in this instance, an $80,000 of building coverage. So again, how well insured are condo buildings and units? So that's another question. Also, large commercial structures. Typically, they can be broken up into different sections, divided by partition walls and separated by walkways. So additions and extensions attached to and in contact with the building by these methods may be insured under a separate policy. Rigid walls, solid load-bearing walls, stairway, elevated walkway, or roof. The picture that you're seeing is a old trolley building in Massachusetts, in Wareham, Mass. The building is truly separated, as you can see in the photo below, the aerial photo. That's the building, and you can see that it's cut right in half by an an elevated walkway. In the aerial photo, you can see that. So this building, which had one insurance policy to insure the whole building, was able to get two insurance policies, one for each section. Again, properly insuring, maybe not up to 100% of the replacement cost of this commercial structure, but a whole lot more than it did under one flood insurance policy. So again, are we properly insured? Are we underinsured? And how does that affect recovery and resiliency? And by doing these proper pieces, you can be properly insured. There's the building. And there's the other wing. Now, homeowners has a role to play here too. Homeowners insurance, flood is not covered under most homeowners policies. There are some policies starting to include flood coverage on them, but most do not have flood insurance built in, never mind endorsed to the homeowners policy. If a house burns down or damage that is other than flood insurance, and it is in a high-risk flood zone, so any of those A or B zones, it will still be required to come into compliance with the flood maps. And even though either flood or ICC from the flood policy is not available in the case the house burns down, it's very important to have more ordinance and law coverage in these areas. So in places where the homeowners company can, a homeowners policy should be endorsed to include more coverage for ordinance and law. Now, at Rogers Gray Insurance, we endorse almost all of our policies with homes in those high-risk flood zones on the homeowner side to at least 50% of coverage A, which is the building coverage, as ordinance and law. So for example, if you have a building that's worth $200,000, $100,000 of that is being endorsed to be covered for ordinance and law. So in a complete loss, you would get the 200 plus 100 for ordinance and law if it costs that much. In addition, a lot of homeowners carriers, especially the local and regional carriers, are requiring copies of flood insurance policies to prove flood coverage in those high-risk zones, even if flood insurance is not required. So it's showing that the homeowners companies are starting to take notice. More recently, Cincinnati Insurance is requiring elevation certificates. So again, they want to see positively elevated buildings in comparison to the flood zone for that area. Now, in Massachusetts, we have a law that says that the lender cannot require anybody to purchase a flood insurance for more than the mortgage. So the mortgage company, the requirement is the lesser of the full amount in the program, the loan amount, or 100% replacement cost, the least of those three. Well, in Massachusetts, we are actually required on a 1 to 4 family dwelling disclose to the insured that they do not have to have insurance for more than the mortgage. So after I, as an agent, are done convincing them to be properly insured by one of the methods that we talked about earlier, or just to cover at least 80% of their structure to get replacement cost coverage, I now have to disclose to them that they're actually not even required to carry more than the mortgage. This is a huge issue, and it really starts to make us think again, how many underinsureds do we have, not just non-insureds? And it also talks to goes to the fact that how well are we recovering and how critical it is for us to recover properly in order to have our communities be more resilient, all through flood insurance. So resiliency. So, back in 2013, after the marathon bombings in Boston, we had up in New England, we had a saying that really started to sweep the country depending on what disasters were happening in different parts of the country, called Boston Strong, right? Boston Strong, hashtag Boston Strong, and then other communities and cities used it as New York Strong, Chicago Strong. But why can't we have a community strong or resiliency strong, right? We should come up with the hashtag resilience strong, right? Because the more that we become resilient, the better our communities will recover from these flood disasters, because resiliency is the capability to recover quickly from difficulties and toughness, as the definition says. So our resiliency should be strong, right? Resilient, strong. So let's take a look. So here we have flood city, floodville, and we have some structures in the V zone, some structures in the A zone, and some structures in the low risk or X zone. And obviously this is just a snapshot of one part of the city. But let's take a look at floodville and the flood policies in place there. So Flood City. Flood City has a total of 10,000 buildings, and Flood City has a total of 1,700 flood policies. The total premium in force is about $2 million, but the total insurance coverage in force is $446 million. And Flood City has a population of about 20,000 citizens. So how are we going to tie recovery to resiliency to make our community more resilient? Well, let's start to take a look. So here are the different silos of recovery after a major disaster, showing and highlighting why flood insurance is so important. So Flood City has a big disaster. So let's talk about disaster assistance. Well, the average payout for disaster assistance, individual assistance in Hurricane Harvey, it's only about $6,000. So that's not a lot. How about HMGP? Well, it is a limited funding source after a storm, and it also takes about 3 years is the performance period for an HMGP grant to actually take place to elevate a structure. So it may be, or help them financially recover in a different way. So that's not really a immediate or quick financial source to get somebody back into their home and recover and make them more resilient quickly. How about SBA? Well, SBA is available after, an HMGP, it's important to note that's only if the disaster is declared a presidentially declared disaster. But what about SBA? Well, SBA, the Small Business Administration, does allow up to $200,000 for primary resident homeowners only, and it also is only available after an SBA declared disaster. How about traditional lending? Well, traditional lending is always available, but there are loan-to-value requirements. And the 203K loan is a more flexible loan, but there still has some lending requirements and restrictions. So somebody in a very tight, remember we talked about earlier, there's almost half of Americans are in a very tough financial position. Any type of lending may not be necessarily a way that they can go. And what about flood insurance? Well, $446 million across the entire community for those individuals in Flood City is available, guaranteed to be available very quickly after a flooding event. So I thought this was another great statistic. About 80% of our declared disasters are $41 million or less, but also that, and I went back and did a little study, and since 1953, when FEMA was keeping records of their declared disasters, that if you were to add up all the counties that had declared disasters, 39,266, if you add all the counties together, 54% of those did not include individual assistance. So that little tiny first silo of a little bit of funding, that's $6,000 on average from Hurricane Harvey that an individual would get, eligible up to about $35,000 now. 54% of those declared disasters did not include individual assistance. So that first silo of recovery dollars was not even available more than half the time. And this is critical. It's just highlighting again how flood insurance can make us more resilient in our communities. And also the flood insurance affordability study done by FEMA several years ago shows that over 70% of our policyholders and non-policyholders, so individuals within our SFHA, our high-risk flood zones, are considered low income across our whole country. So this is critical that flood insurance becomes not only available to them, but somewhat affordable to them so that they can purchase flood insurance to recover and become more resilient through our communities. And I highlighted here also that for those individuals that may be low income, the over 70% of our policyholders and non-policyholders, annual increases are also going up at a drastic rate, especially for those pre-firm businesses, pre-firm severe repetitive losses, and pre-firm second homes. So here's a brief bit on how affordability can help. Oh, and I've highlighted those so that you can see those two numbers. So if a community does its part, right, community officials, if they do their part in order to enforce building code and the NFIP minimum standards, they'll make flood insurance more affordable and their structures more resilient, therefore making our communities more resilient. So here, if a building is built at the base flood elevation, a premium is about $2,000. It's actually probably a little more now. And if that's elevated 3 feet above the base flood elevation, the premium goes to $400 in an AE zone. Again, just an example highlighting how if a community properly enforces their flood insurance requirements, that they will make flood insurance more affordable. Also interesting statistic, where are we most vulnerable? Well, 4.1 million NFIP policies are for single family dwellings. The average flood insurance paid claim is $43,000 if you add up all year's claims payments. FEMA estimates that 90% of all repetitive loss properties were built prior to December 31st, 1974. So what does this mean? That means our most vulnerable buildings are pre-firm single-family dwellings with small to medium-sized losses. That means that our resiliency is dependent on getting flood insurance into those individuals' hands. And here are some examples of local ordinances that communities have enacted in order to help our communities become more resilient. In Marshfield, Massachusetts, you're allowed a bump out. And here's a quote from that bylaw. When floodproofing an existing home on a pre-existing non-conforming lot, one single story, 32 square foot utility addition on the first floor may be made in order to put your utilities in. And that is so that you don't have to worry about your offsets and violating those to make that bump out to move your utilities up out of lower areas. And in Hull, Massachusetts, there's a freeboard incentive. So there's a credit up to $500 for permit fees if you build your home higher above the state requirements and federal requirements. So here communities are actually doing things to make their communities more resilient through building code and local ordinances, and also in doing so helping flood insurance become more affordable, therefore having individuals purchase it, therefore making our communities overall more resilient. So insurance affordability means better financial resiliency, as we just saw. Mitigation that leads to affordability means better financial resiliency. Communication to our insureds means better financial resiliency. And flood insurance means better financial resiliency. So all these items that we talked about equal better financial resiliency. So again, in Flood City, why should a community worry about one or two policies being sold, right? Why PRP here, A zone policy there, every here and there policy is being sold? Well, because if a policy is sold for the most amount of available through the NFIP at $250,000, every 4 policies sold means that $1 million becomes more available to that community for their silo of flood insurance resiliency funds. So selling 1 or 2 policies here or there actually very quickly adds up to having your community be more resilient after a large event or small event, as we saw in the slides earlier. So how have we actually done this to help our communities sell flood insurance and become more resilient and understand how to make them more resilient through flood insurance? Well, after a large event in 2018, the Massachusetts Coastal Coalition, which is one of the organizations that I'm involved with, we went out into the communities across the state and held pre and post disaster outreaches. So in 2018, we held 5 statewide post disaster outreaches and 1 pre-disaster outreach. Hundreds attended, many policies were reviewed. We advised and provided and followed up on information regarding flood insurance, and helped individuals understand the importance of flood insurance better. And unfortunately saw a lot of people who did not purchase flood insurance and the issues around recovery that they had. But here you can see the photo on the left I took actually of one of those bad nor'easters, and these are some photos of the outreaches that we did. Again, another solution to some of these resilience and flood insurance issues was we propped up our own flood insurance information center. So we have a specialist that through certain days and times mans a email that we have set up where people can send their emails on flood insurance questions. He reviews them, sends us responses to those insureds to make sure that they are aware of both their vulnerabilities and answering their questions at the same time. And it allows us to engage our policyholders anywhere, and this information service is available to anybody. Allows the question to be answered and information to be exchanged in a way that helps insureds understand why they should have flood insurance, in hopes that they're buying the flood insurance to make their community more resilient. We put out information such as this. This is a disaster resource for homeowners talking about all the different financial resources available. This is very much similar to this slide earlier showing the silos of resiliency. So this resource is available, and actually the second page, which isn't shown here, concludes with the importance of flood insurance, basically talking about it exactly the same way we've talked about it today, using it as a tool for recovery and resiliency. We have implemented the community rating system for several communities and run a CRS users group up here in Massachusetts. And through that, in one of the communities that we did CRS for, we actually did a flood insurance study. And through that flood insurance study, we actually found areas that we needed improvement for, and you'll see those highlighted areas here. About 38% of the structures in the community are insured. We broke down even the amount of single-family dwellings that are insured versus those that are insured that aren't insured. Other information in regards to flood insurance. I'm sorry, there's 38% of single-family structures, and 45% of those are insured within our SFHA. So this information has helped the community put together a plan on how to better insure their community. And one of those ways is doing more community outreach. Again, getting the message out there, communicating resilience and recovery. So these are the types of things, and you'll see this is from the Marshfield, Massachusetts Plan for Public Information, which the PPI alone is that blueprint on how to communicate these issues to the community. And you'll see here are actually some of the highlighted conclusions from that flood insurance study. For example, we need to include real estate agents in our target audience. And because of how much of the town's high-risk zone, we need to include building in compliance messages. So this is really the blueprint from that study on how we communicate those issues, such as flood insurance being used as a tool for community resiliency and recovery. So thank you very much for attending our presentation today. Here's my contact information to learn more, whether it be the Coastal Coalition, Rogers Gray, any of the other associations, boards, or organizations I'm involved with. I appreciate it very much, and I hope this was informational on how to make our communities more resilient and our individuals recover quicker with flood insurance. So thank you very much.